Excel accounting practice problem. Apply customer deposit or credit to an invoice. Get ready because we're going to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet, now entering more transactions into it if you have access to it. There's two tabs on down below, an example tab and a practice tab. The practice tab starting out where we left off last time. The example tab in essence being an answer key. Let's take a look at it now. In prior presentations, we thought of a scenario where we basically had unearned revenue, even though we didn't post it to unearned revenue, meaning we got money in advance of us doing the work. Our scenario here being that we had customers coming into this shop wanting particular guitars. We didn't have the exact guitar that they wanted, but we were going to order it for them or see if we can get it for them. We wanted to lock them into the sale, however, before we order the guitars, and therefore we asked for a deposit, getting money before we do the work in that case because we have not yet provided them the guitars and we got money first. So normally the transaction, if you've learned like accounting transactions for unearned revenue, would then be a debit to the cash. We put it into undeposited funds and usually a credit to unearned revenue. However, from a logistical standpoint in accounting software, if we put it into a liability account of unearned revenue because we have not yet earned it, it can cause some problems because we don't have the subledger related to unearned revenue. The subledger is related to the accounts receivable. So oftentimes the accounting process will actually put a negative receivable so that when we go to the subledger that's going to be supporting it and can be automatically connected to it, then we're going to have these negative amounts here that have not been tied out to the invoice. The nice thing is now that we enter the invoice about doing that, we'll have then be able to tie out the prepayment to the invoice. The software can apply the credit out more easily in that format. You can see just from a software perspective to tie the two things out is going to be easier when you have the sub account formatted in that way. However, it's not exactly proper until you get the actual job done. In other words, after this point in time when we have invoiced them, we're okay, the reporting looks good. But if we're at this point in time where we have the deposit and have not yet issued the invoice, then we're not quite right there because we have understated the accounts receivable and we have understated the liabilities. And so we would have to do an adjusting entry, which we'll talk about at the end of when we get to the adjusting entries section. So that's going to be the general idea. So now we're going to take one of these items and record the journal entry related to the invoice, and that will just be a normal invoice for us. But then when we post it out to the subledger, they'll match out. And you can imagine in practice, you make an actual invoice in software doing this. And what you would like to do is tie out the invoice to the payment that has already been made. So you can see the partial payment actually being applied to a particular invoice, which again is an important component so that you can list the open invoices in accounting software. You can see that added level of complexity and added level of kind of detail that is useful for bookkeeping purposes. So we're going to go back on over to the practice tab. Let's do some setup stuff first. I'm going to hide some information from the skinny on over to A. We don't need that. Let's hide it. So we're going to hide that stuff. And then I'm going to take my ending balances and make them our beginning balances so we can focus in on just what we're doing at this point in time. Copying that, pasting it, just the values only, 1, 2, 3. In other words, deleting the information in the middle. So there we go. And now we're focused down here on our invoice type of transaction. So it's just going to be like a normal invoice for us here when we enter it in here. But again, you can imagine when you enter this into accounting software, you would create the invoice and try to tie it to that credit, tying it to that invoice transaction. We'll see it here in the subledger, how it will match out. So let's take a look at it. We're going to say the accounts receivable, normal invoice type of journal entry. Accounts receivable is going to go up. The other side, we're going to have sales tax that we're going to have to deal with. And then we're going to have the sales or revenue account. And then we're also going to have the cost of goods sold and the inventory. These are the accounts that are impacted typically when we make an invoice and we're selling inventory on a perpetual inventory system. Let's do an indentation here, indentation there. And now we want to see what the cost of the thing that we're selling is, the cost of the guitars. To do that, we're going to go all the way over to the subledgers. So let's go on to the right to the subledgers for the inventory. So we're going to sell another ELP. We like to sell those ELPs. We sell a lot of those. So this is going to be on, what did I say the date was again? The date was 2/26. So I'll say 2/26. We're going to sell one of these. They cost $400. So 1 times 400 is 400. The ending balance is going to be 400. And then 1 times 400 is 400. We had 3. Now we sold 1. So we got 2 left at the 400. Multiplying these out, we're now at the 800 left over after we're out of balance from the trial balance by the 400. We're also going to say that we sold one of those EPSHs, which are going to be over here and then down. So it's going to be right there. And so this happened on 126 as well. Same invoice we're populating, 126. Cost of goods sold area, we're going to say we sold 2 of those. They cost $320. So 2 times 320 is 640. So we'll pull that over to the ending balances. So 2 times 320 is 640. We had 5 units minus 2 units. That gives us 3 units left at the 320. So 3 times 320 means we've got 960 left. So if I take this 640 and then this other 400, I'm holding control down. That adds up to 1040. That's what we're out of balance by. That's what we're going to make the journal entry for our transaction. So let's go all the way back to our data input for the general journal. And we're going to say that, let's start down here in the cost of goods sold. I'm going to say this equals, I'm going to pull those 2 amounts that will be populating on an invoice, the 2 items that we sold, which was the ELP. So here's the ELP plus, and you can't pick up this number here because you'll get a circle reference. Again, try it out, test it out if you don't believe me, or if you just want to see what a circle reference is, you could do that and check it out. So then this is going to be the 640, enter. So there's our 1040, roger that, form 1040. So there's the negative 1040 there. Then the sales price, not necessarily tied to the same cost. We're tracking the cost in the subledger. So this would be driven by an item in the inventory. So I'm going to say we're selling them for 400 times 2 for those 2 guitars we sold, plus 500 for that other guitar. And that's the cost. Sales tax we're going to have to charge is going to be equal to the 1300 times 0.05. And then the negative sum, the plug formula, what we're going to have to collect from the customer, 1,365. Let's post it out. Post it out to the trial balance first. Accounts receivable up top. We're in cell N6 equals, scrolling down. We then pick up that 1365, bringing the receivable up to 20,426. That's the same for the February data and the year-to-date data because we're on the balance sheet. Then we got the sales tax payable. Sales tax payable is going to be in N16 equals, scrolling down again to the sales tax. It's going to be going to the 2868, which is the same, both February and year-to-date. The sales revenue number is going to be equal to the 1300. So that, of course, is different because at least the totals are different because we started on just February. We were at the 9174, increasing by the 1300 to the 10474. And then the year-to-date number, the 2 months, 5650, up by the 1300 up to 57350. The net income down below, you can see on just the month of February was 2,036, up by the 1300 to the 3336, and the year-to-date was at the 9463, up by the 1300 to the 10763. Let's post the cost of goods sold now. Cost of the goods that we sold is going to be equal to the 1040. So on the February numbers, we were at the 6792, up by the 1040, basically expense, taking it to the 7832 on the year-to-date 2 months, 4434, up by the 1040 to the 4574. The effect on net income, we started at net income for the month of just February 2036, up by the difference between the two of just the 260 up to then the 2296. Year to date 9463, up by the 260 to the 9723. Then we got the inventory, finally, the inventory, and N7 equals, scrolling down, picking up the inventory, and that then changes the inventory, decreasing it to 5226, which is the same for both year to date and February, given the fact that it's a balance sheet number. Let's post it to the GL now. So we're gonna let's make this one green to focus our eyeballs where we want our eyeballs to be focused. Gotta focus. So we're gonna say this is gonna be the accounts receivable, which is the third account. Third account on the AR, A to the R is going to be here on 226. So we are now in AA9 equals, left to the wall, scrolling down to that last transaction, the 1365, enter. There we have it, taking the 1961 up by the 1365 to the 20,426. That should match what's on the trusty TB trial balance. It does indeed. So let's scroll down and then do the next one, sales tax payable. That's the last liability accounts on the TB trial balance. It's going to be the last liability on the GL as well. So let's scroll over and find that one. Let's find it and post to it. It's in AT it's at AU. It's at cell AU20 equals, and then we're going to go left to the wall, and scroll down, picking up the sales tax payable, increasing it to the 2868, which should match what's on the trusty TB trial balance, which it does. And so that's the first half. Then we've got the sales. We need to post the sales. So scrolling up to pick that up, going all the way to the right. That's going to be our first, blue and white account here. So we are in BB8. This is on 226. We're now in BC, way over in BC8, way back to BC8. And scrolling over to the right, we're going to be picking up then the sales of the 1300. That brings the year-to-date number up to the 57315. And then the February number should be 10474. Let's check that out on the trial balance. So we had the 10474 in the 57315. So let's then go down and say, okay, we're going to do the last component here, last bit. We do have to also do the subledger as well, but hold on a second. We're going to make this back to blue. If you don't have that blue, it's down here. It's in the standard. There's the Excel is fun blue thing. So now we're on this one. I don't need to make it green because it's the last one. So we're in the cost of the goods that are sold. That's going to be the third income statement account all the way to the right. So we're going all the way to the right again. And we are now in cell BF8. So we're looking 226. We're then in cell BG8 equals, left till we hit the wall once again, scrolling down to find the cost of the goods that are sold. 1040, form 1040, roger out, roger that, 104. So we're at the 4574 year-to-date numbers, and we're at the 7832 for the February numbers. Let's take a look at it. Check that out on our trial balance, the 7832. I think that's what I said. 4574 cost of goods sold. Looks good. So now we're on the inventory. So we're on the inventory. That's going to be the fourth account. That's the one that's hidden down below, I think. It's down here somewhere. Yep. On Z29, we're looking 226. And then an AA29 equals, left till we hit that wall, we're looking 1040. So now we're down to the 5226. That 5226 also on the trusty trial balance, 5226. We're back in balance in the GL up top. Now we also need to post to the accounts receivable for the customer that we got the money from, which I think was Mr. Anderson again. Mr. Anderson. once again, is the one involved. So we're going to go on over to our subledger over here, breaking out the accounts receivable by customer, and Mr. Anderson guitars on 226. We're going to say, I already had it posted. Sorry about that. I deleted it. So now we're going to post it again. So on 226, we're going to say on BW6 equals left to the wall. And we're going to scroll down to that last item, which is the accounts receivable 1365, enter. So there we have it. And this is the component where you can kind of imagine tying out. Remember, if you're actually creating an invoice, we would like to say this would be the amount for the invoice and show on the invoice that prepayment so that we can show that they owe us the net amount, which would be the 1065. Here, we just see the detail on the subledger. So when you're looking at it just with a subledger, you're saying, okay, that works fine because I can match those two things out. But in accounting software, if you were to bill the client, make a form for it, you would like the invoice to be able to tie out, meaning I would like this invoice to be indicated tied to that 300 payment so that I can show that that particular invoice only has the 1065 remaining in it. And doing it this way allows a software system to do that a lot more easily than if you were to create a liability account when you got the deposit, because of the way it's connected to the subledger. So this subledger works out, looks good, but again, that you have that added level of complexity in the software where you would like to look at an invoice and see if that particular invoice has been paid or not just the list of activity here in the subledger. And again, a computer software can kind of give you that added level of detail that is a little bit more difficult, on a one-dimensional instead of like a multi-dimensional database program to a spreadsheet. Okay, so this is what we have thus far. This is where we stand then. This is where we stand at this point in time. These are our ending numbers. These are our ending numbers. You could take a look at those.